In my last video, I talked about how to find out whether the stock market is overvalued, fair valued, or underpriced. In today's video, I'd like to share with you a simple but effective way to pick individual stocks, which should be helpful for you if you are a beginner in stock market who just buys whatever stock his friends tell him, and should save you a whole lot of money if you use it right, and even help you earn some money. Now, if you are a finance person, you can just skip this video because this is not the thing you want to hear. Before we start sharing with you this small but effective technique, I want to ask you a teeny tiny help. That is, click the like button and subscribe to my YouTube channel for YouTube algorithm. Because that way more people will watch my videos and I will become more motivated. And I will produce more useful videos for you. Now, without further ado, let's start. I'm sure you have heard a lot of people talking about their ways to invest in stock markets. One of them is to consistently buy index stocks, such as S&P 500, for every month or every 2 weeks, because that's how often people receive their salaries nowadays if they're working for full-time. That's good. But if you're picking out those index stocks that have already been overvalued, then you probably won't earn any money. Chances are that you'll lose your money, even they are index stocks. Like Tesla stock right now. If you buy Tesla now, the chances of you getting 50% return is very low. I'm not saying zero, I'm saying it's quite low. Instead, if you buy good quality companies that are undervalued, you are much more likely to make money, even if you have never heard about them, when their price eventually rises up to their fair prices. Yes, I'm talking about value investing, which is used by a number of great investors. But today I want to talk about it in a much simpler way. I like growth investing too, but I don't know how to do that safely, at least now. So I'm not going to talk about the things that I don't know how to do and confuse you. Instead, I'm going to talk about the things that I'm quite confident at, and hopefully you'll learn and benefit from it. You can at least think about it if you are skeptical, okay? That way you won't earn any money, but you won't lose either. The techniques I'm going to talk about is actually quite decent. The good thing is that it doesn't require a lot of time to do it. All you need is stock analysis report about the stock that you are interested in. And these reports are gathered and analyzed by professional stock analysts. Normally you have to pay a fee to get these reports. But today I'm going to tell you how to get these reports for free and completely legal. So bear with me, I'll get to that later. If you use these techniques, you're less likely to pick a bad stock and lose a lot of money. This is not a secret sauce or similar things. This is just an effective techniques that everyone can figure out if they spend a little bit time studying stock market and avoid losses. It's just that most amateur people don't use it, or don't know how to use it, or are not instructed to use it. Today I'm going to tell you about that. The reason I'm going to tell you this is because you're watching my YouTube channel and I want you to learn something useful. In return, I'd like to ask you to click the like button and subscribe to my channel. That's just 2 clicks. That's all I'm asking for. Alright, the technique is basically about getting used to use quantitative equity research reports. Again, it's about getting used to use stock research reports. It's about habit. You don't have to spend a year in school or on online courses to learn how to read them. You can just pick it up right now. It's fairly straightforward. And of course, if you want to be an expert in this field and beat the market, then you probably have to spend a lot more time to learn how to read them from inside out. But if you're a beginner, I'd like to say that learning to pick just a few important numbers and words, you should be able to at least avoid losing money. If lucky and do it well, then you would probably earn some money. You can get these reports easily. I'll tell you how to get these equity research reports later in this video. Equity is basically professional word for stock. You can treat them as stock analysis reports done by professional analysts. They are serious reports done by experts who have high ethical standards. They are expert, at least compared with me or people like me who have no finance background. They are consistently monitored by their peers for the quality of their reports. And even my professional institute like CFA, believe in me, most of these analysts are already CFA or going to get their CFAs. So just trust them and their reports. It's much better than what your neighbor told you over the fan or in the elevator if you're living in an apartment. In some of these reports, not all of them, analysts write a few numbers. The one that I'm most interested in is called fair value, which is basically the price the stock was when the report was generated. These reports are basically generated almost every business day. And then I use this value to compare with its current price. If the current price is higher than or even very close to its fair value, then I wouldn't even look at other parts of the report. I'll just move on to another stock. If your stock has fair value close to or even less than the current price, then you should consider selling them. Because above the fair value, the price probably won't rise much. Tesla is like that now. It's currently ridiculously expensive. I read other parts of the reports only when the fair value is significantly higher than the current price. I use more than one reports. I use several reports generated by different analysts employed by different companies. These reports are often different and they use different measures and often give you different perspective about the stock that you are interested in. Once I have a stock that has current value much less than the fair value stated in a research report, then I look at how stable this company is. And in another word, how stable this company is as a business and how healthy in terms of finance. The first thing I would check is whether the revenue is stable over the past few years. These reports normally include them and they should appear at the top of a table in the report. Then you can look at whether its operating margin is positive and stable over the past 3 to 5 years. If they are positive and stable, it's a good sign. Then you can take a look at something called uncertainty. Some reports has it, like Morningstar, which is my favorite, some don't. If its uncertainty is extreme, then I would consider selling, not buying. If uncertainty is very high, then I'd think about buying some of them. Besides uncertainty, you can also look at financial health and economic moat. If they're strong and still underpriced, although it's rare, that's great. I would consider buying them right away. Another thing you can take a look at is dividend yield, because you might hold the stock for a while if you buy it, and in the meanwhile you can also earn some dividends from it. Another thing that I also look at is recommendation. It's often one of 5 values: strong sell, hold, buy, strong buy. People usually buy a lot when the recommendation changes from hold to buy. So you probably want to buy it when the recommendation is still hold. Another thing that I also look at is where the stock price is going. I probably wouldn't buy it when it's going down, even the current stock price is much lower than the fair value. Instead, I probably would buy it when the current price is less than the fair value and is still going up. That's pretty much it. It's a very simple but very effective way if you use it right. You can screen through dozens of stocks in a day with this method. Then you can choose the one that you like. Now let me tell you that this method won't guarantee you to catch every chances of stock price increase, because that's impossible. I can tell you that with 100% certainty. Think about that. Even the greatest investor Warren Buffett has missed a lot of great investment opportunities. How can this small technique make you to take on every opportunity in stock market? The key here is to getting rid of your habit of buying stocks heard from news headlines or over a coffee chat with your friend, and getting used to use real solid research reports. Believe me, there are a lot of people buy stocks based on what they heard on news or from his friends or her friends. I was one of them. Now I'm not. Now let's talk about where to get these stock analysis reports. These reports are normally exclusively available to those who pays premium fees, like Morningstar. If you pay Morningstar a premium fee, then you are able to see their most recent research reports. Thomson Reuters generates stock reports too. These are the ones that I use these days. Normally you have to pay fees to get these reports, but I'm going to tell you a way to get these reports for free and completely legal. Here's how. If you go to your bank and open a trading account, your bank should be able to give you access to these reports as a complimentary service for free. Of course, your bank have paid the fees for you so that you can use it. For example, my bank gave me access to Morningstar reports and the Thomson Reuters reports for free. So I can read the most recent reports about the stock that I'm interested in and I make my decisions. But I don't need to look at the reports every trading day because their valuations don't change much from day to day. But I do need to have a look once a week. I think a week is a good frequency because I have a full-time job to focus on during the day. So that's how I pick my stocks easily and effectively, without spending days or weeks studying them or blindly following the news or others. I hope you learned something new. If you liked the video, please click the like button and smash the subscribe button for YouTube algorithm. Thank you and see you next time. Bye.